yeah, 6390 was the level I've been gunning for the past like 2 weeks. And so finally we're here, right? We hit the 1618 of this WXY. We hit the 300% of this, what my alleged like AB is, right? And then like if you continue to do the extensions cascading downwards, then a lot of the confluence lies within kind of this area, right? 6390, 6400, right? And then we have the predictive pattern level right over here, right? The liquidity that we have bounced at 3 times. And each time has been fairly good, right? With the exception of the first time. Like it took us a bit. This is a 12-hour, right? It took us a couple days to get a move on, and we kind of consolidated. But I would say like the great thing about this level is that if we do end up closing below or like gapping below on Sunday, and then holding underneath, then we will just fall another like 150 points. Or what is this? 200 points, another 200 points. So, but that's what I've been saying like this whole time, right? Like this is such a good opportunity for either direction, because if it does end up confirming the move up, then we enter this idea of like a convergence between the two biases. I know I haven't really talked about Elliott Wave with you, but the main concept that the main concept here is that whether or not you think the overall move is going to be bullish or bearish, both of these moves are pointing upwards in the same direction. And then the area in which we would most likely reject would be somewhere around here. So this is like where the paths like diverge. So yeah, I mean, depending on how Sunday goes, I'm assuming we're probably going to hold. The pattern for the last few weeks is that there's been like some good news that comes out throughout the weekend, right? Like it happened last week. Last week was a really good one. Good example, like we hit this predictive pattern low, right? The multiple fibs here. And then we mimicked the same linearity off the bounce, right? We get like an immediate like kind of thrust here, I guess, right? The same thing here. And then the Friday before that, right, was another, literally another example of that, right? We were at this heavy predictive level with like multiple fib confluence, the 618s, the 100%, right? This is the level I mentioned back in early March, saying that I already had bids here, and then the same thing happened, right? So this has been the pattern for like the last 4 weeks. I'm assuming that it's going to stay the same, especially because like this level here is much more significant than these levels in terms of like fibs. So yeah, the only thing that's kind of concerning is how bearish NQ looks, because this 12-hour actually closed underneath like these liquidity levels pretty like convincingly. So I do think that there might be some possibilities of like downwards continuation. And so like for NQ it would be 22.6, or somewhere around like here, wherever this range is, right? The bottom of here. We'll see when we get there, but I'll probably make that. I'll get a better idea on Sunday, Monday. But another thing I was looking at was crypto. Crypto looks pretty shit right now. Like I really thought that it would come down the same way ES and NQ have, and at this point I would have preferred if Bitcoin or Ethereum were at these levels that I was looking for. For like Bitcoin, I was looking at 53, and then Ethereum, I was ideally it holds like the 1700 low. But if we do end up going down, right, then this just pushes ES down to like 6200, and then NQ down to 22.6. Regardless of where we go, I mean, we're not like in a massive corrective move, I would say. And this is pretty, in the grand scheme of things, like this is pretty healthy for the market, I would say. yeah, I mean we can't just keep this straight line, right? So and one thing I talk about this every time we have some kind of like major-ish correction. I wouldn't consider this a major correction, but like um, if you look at all the times we correct on the super high time frame, right? Like the monthly. So we have this impulse here, 30-degree angle, correction. This impulse here, 75-degree angle, correction, right? And then this angle here, I guess, sorry, this would be, I think I had my count here. Right? So this would be like a 60-degree. This is fine, right? So 70-degree, and then correction, and then we get another steep move, 70-degree, correction, and then we get an 82-degree move, or just like steeper and steeper and steeper, right after a correction. So this has been a pattern since the conception of stocks. So in theory, obviously there has to be an end to this pattern because it can't just keep going like steeper and steeper, right? But I think this was very important to note, especially like when I was looking at the move over here, considering that this was the correction. I kind of assumed that the move would be impulsive as well, and it very much was, right? There was not a single like red month. But I'm thinking, and this is a concept I got from W.D. Gann. I don't know if you're familiar with him, but he was like a pretty famous stock trader. Like dabbled in some of his concepts 3 years ago, but I don't use them anymore because they're a little too complicated. But the big thing here is that, like, I mean, the fundamental behind this analysis is the same as the fundamentals I have, right? Everything I do is based off patterns. So this is one such pattern. So if we do end up reversing, I do think that it'll be really, really fast, and be surprisingly much more impulsive than the current one. Yeah, so that's kind of my plan here. Just to reiterate, I guess on Sunday, like for the short-term trade, just looking for a bounce up to, if we gap up above 64.30, I think we will instantly recover to 64.74 overnight. So that would be a nice 70 points. But the big thing, right, is when I'm looking to the left and the times we did bounce, we usually end around here at 64.78. So I'll just zoom in a bit. Like right here. We bounce here, we end near like 64.78, like here, right? So that's what I will be looking for. Mm-hmm. 64.70-ish. Yeah, 64.70. And then if we end up closing below, right, we end up gapping down below, then, I mean, we will just flush straight down, right? Like this will be just a pretty simple confirmation move down. Yeah. And then like this pivot point just moves a little bit. If you remember the day, that'd be easier. Oh yeah, so 325. Yeah. It was here. Right. And for those watching the YouTube video, you can't hear the mentee because I have it muted. But I'll repeat the question whenever you ask it. Yeah, that's fine. I mean, I can quickly explain this one too, right? This one was just very, very clear liquidity, blocked by 6680, right? Supported by the fact that we have like two bodies here, and then the multitude of the candles here, where we just continuously reject the same level. The pattern brought us down to like 6638, but this was during like overnight session. So I assumed like the next day or the real trading hours would be a little more volatile, and I would assume that right, like if we present this as a range, like so, then we can mark the. This would also be a range as well, but this is mostly just an extension of that range. This range here, or you could argue that this is the extension of that range, or whatever, vice versa. But the big thing here is that 90% of these candles here test this level at 6603, right? 3 wick, 3 bodies. So, I mean, this is where price wants to gravitate towards, right? Like 6603. And then eventually we close below this liquidity and then just confirm the move down. But that's the reason why I said this message here at 2:30 a.m. All right, but yeah. Yeah, no worries. I'm gonna stop the recording here.